Hey everyone, welcome to the market review. Well, the bear trap scenario played out, and this was the expectation. How Friday played out changes things a bit in a positive way, in a more bullish way, because I didn't really think we would get this big of a push up. And this was Friday. We had an ATU vol. Let's switch to breadth. And generally speaking, this is New York Stock Exchange, and it broke out here, which is extremely bullish because it's been consolidating like in this channel for a long time. Whenever we get like ATU vol days in a similar setup, which not here but on SPY, this was a low. It was a pullback, and like for example here after the pullback, we had a follow up like this, and this is kind of what I think we're gonna do now. Uh, this one, same kind of thing. It didn't go immediately, but it went up nonetheless. This one, it was in the middle of the cycle and it still went up. This one, we went up, and so on. Uh, Breadth expanded a bit here. We are back in green in the McClellan oscillator. So things look good. On top of this, we have breakouts on equal weight SPX. We have on transportation averages went even higher. New York Stock Exchange, like I showed. DIA, also breakout horizontal and from pennant. IWM looks extremely bullish, like we bounced from 55 EMA after we had a large rally up, pullback, bounced out to 55 EMA and the long yearly trigger, and it was like a 3.6 day super fucking bullish. QQQ still looks kind of like shit, but it's also a bounce after a big correction, and we bounced off the short trigger on the yearly as well. And SPY, which is SPY, we bounce again off the number one day for premium. So things look quite bullish. I didn't really think we would be this bullish. I thought we would be green, obviously, but seeing this amount of strength is actually a very encouraging thing because we had broad market participation like we see here. And if this continues, how I thought it would happen is like we would get more like another rotation day, either tech outperforming at the rest of the market, not really doing so, or the other way around. But we got basically everyone participating, and this is extremely bullish, especially if we had continuation. Next week, we have a very interesting combination of things. A lot of economic activity, economic data releases. Uh, we begin with Waller and Miran speeches. I don't know about Bostic, but this two will be saying that we need to cut more. Waller will say the jobs market is very weak and we need to cut. Miran is Trump's bitch, so he'll do uh, whatever that implies. Then we have jobs data, we have retail sales, and then jobs data on Wednesday. This was supposed to be on this Friday, but it got pushed back by the mini shutdown, and now it's replaced CPI. CPI was supposed to be here, and CPI was pushed to Friday. Like I told you guys, I think CPI will come significantly under expectations. The expectation is 2.4, and I think we get like a 2.1, something like that, because inflation cratered, and inflation is basically oil prices. If we look at this, not Colgate, oil futures, and if I add inflation rate, is an L, I'll go to the weekly. So again, magnitude doesn't really matter that much, but inflation is basically oil prices. You can see how well correlated they are, and one follows the other quite well. Like even here, like oil prices. And now I don't think we will get this spike that we had in oil over the past months the year began reflected into inflation quite yet. I think we will reflect basically the lows here. So that's why I think we get cycle lows on the inflation print as well. So we have inflation, we have oil prices, but this will be the cycle low. We start going up again after this, and it will cause yields to spike and move higher. and this is the expectation 2.36, which is 2.4. I think we get like a even a potential 2. We'll see. Either way, uh, it's going to come significantly under by my estimation. We'll see how it plays out. But the combination of all things is showing that the market can go higher. And why I also say this is because software hasn't really bounced. This is IGV constituents by weight. Microsoft is the biggest constituent of IGV, and they all look like shit. Didn't really get a bounce on Friday. Like this is some of them bounced obviously, but it was kind of weak. And there's still lots of room and potential to go. IGF has been getting bottom making flow uh, quite consistently for the past couple of days since we get that drop IGV. Since we got that drop on Thursday. So we got it on Thursday as well, but we got follow up on Friday as well. So I think IGV has the potential to go higher here, and yeah, that will feed the market. Now the question is, if we do like the rotation kind of thing, which I expected initially, meaning some parts go up, some parts go down, but if we do not get the rotation bounce on software, and the rest of the market also participates, this is extremely bullish, and the market could go significantly higher. Now, going back to this. Now, I still think how this changes things is I think we go to like 7,150 here for sure. Question is, do we have a big pullback? And question is, can we get a breakout? And the more strength the market shows, the higher the likelihood that we will actually get a breakout in SPX as well, and it will stick. So this is basically a given. We go here almost 100%, but maybe the pullback is smaller. Maybe we don't go all the way back here. Maybe we transform like 7K into support instead of doing this. Let me go to SPY. I think this was on hourly chart. Turn off some stuff. So we continue going higher. Maybe consolidated day, maybe do this, like, but we go higher, we break out here, and we go to this place. And then we could potentially do this. Like if we are in the bullish scenario post OPEX, we will likely do this. We retest the long trigger. We will behave similarly to how IWM behaved on this. So basically, we break out, we go higher, then we do a pullback, we go to the long trigger on the yearly and transform it into a support, and then we rip from that and we go higher. And once for that higher triggers, that is most likely 730 as the target. So if that plays out, this will be the target, and we'll see where we are when we get here. So this will be the bullish play out if breadth remains strong, if everyone participates and whatnot. Another one would be we go back to where we went here, we do another test here, and we bounce here. But the higher we go, the higher the pullback will be, basically, because we cannot really go too low without the market breaking down. So this will be a 5%. So this also a possibility, and this one would be very shallow. This will be like a bull market pullback, like only 1.8, 2%, something like this, because we can overshoot this a bit. But generally speaking, this is not a lot of upside either. Like if we go to the 710-ish, 711-ish level, this is only like 3%. 3% to here and 5% to here. So uh, it's not a lot of upside. The more strength the market shows, the more bullish it is, and that's kind of the setup. Uh, so that's it for now. Don't take everything super literal. We have to adjust as things go up and based on how they play out. This is still a possibility to play out like this, but given the strength the market showed on Friday, and if that strength is continued next week, most likely that will not play out. This one where we do the golden gate, pull back to the yearly trigger, and then go to the golden fib, because this is the rule. Basically, if we hit this level, there is an 80% chance we hit this level in the interval, but the interval is the full year. So we have a lot of time to go back to this level later on, even if we go down. So that's it for now. Have a good one. Bye bye.